Welcome back to Commercial Connections. I'm Renee Nelson, your host. Today, I have the great pleasure of having Cody Crist and Matt Davis on with me. And we're going to talk about how Trinity is a leader in Dollar Generals. Cody was on our previous show, one of our previous shows, and we've had a lot of questions about Dollar General, how they work. A lot of people are curious about getting into them. A lot of people that own them are curious about how do I improve my leases. So we're going to just jump into it today. Gentlemen, thank you for joining us.
Yeah, thanks for having us.
Happy to be here.
So Cody or Matt, whoever wants to take the question, why don't you tell us a little bit about Trinity and give us your formal company name, because I know it's Trinity REIS. What does the REIS stand for? And tell us a little bit about why you're Dollar General specialist.
So the REIS is Real Estate Investment Services. So we try to shorten it by just saying Trinity. It's a little bit easier. But essentially, we are a brokerage firm that specializes in net lease assets. And I think more specifically than that, we do probably 80 to 85% of our business in the single tenant net lease sector. So we help buyers, sellers, developers, existing landlords, kind of anything that might be needed for a single tenant net lease property. We can provide services on extending leases or helping them buy product or sell product, or just really be kind of an avenue for folks who have questions or need some help or guidance kind of in this sector. We've been Trinity since 2015. And then a lot of us have been doing this longer than that, but we kind of came together in 2015 and formed Trinity.
Oh, that's great. And I've had the opportunity to brainstorm and collaborate with both of you independently and together. And the thing that I've kind of noticed is, Cody, it seems like you work a little more with the developers, and Matt, as a partner and a senior broker, you work more with maybe buyers and sellers that are looking to specifically make changes in their portfolio, whether it's acquire property or sell property. Why don't you each just describe quickly what you do in Trinity?
I think we both definitely help with the disposition side, whether it be one-off sellers or large owners. I definitely have several dozen developers we work with that help bring product to market, help in several different avenues where we can.
So I think part of being on a team is we each find what we enjoy and we each find what we're good at. And that's one of the benefits of being on a team is you have people who can kind of make up for someone's maybe weak spots, or not even weak spots, just areas they maybe don't love doing as much. So over the years of working on a team, and there's three others that are on Cody and I's team, we've each kind of found our niche, right? So Cody is really good at building new relationships with different developers who have products kind of all over the US. I've kind of found a niche by maybe going deeper with individual owners who, might have assets all over, but it's not a continual kind of pipeline of opportunities to sell new stores. So Cody, we each do a little bit of both, but just maybe our primary focus is a little bit different, where Cody targets the new inventory that's kind of always resurfacing. And I'm working with clients who have assets all over, but might have a different need or a different requirement depending on what their goals are for that specific year or for that specific property. And then it all works really well together, based on some of the other guys on our team and kind of their strengths and what they want to do as well.
So a friend of mine is getting ready to retire. She's got 39 days left on her job. She's so excited. And she asked me to look at her Dollar General because she owns a couple in her portfolio. And she's wondering if she's at that stage where maybe she should 1031 exchange into a new one. She bought this one, I think, in 21 or 22. And back then, Dollar General didn't offer the 5% rent increases. And she just knows that she could be at a pivotal point. So I sent you guys kind of some information preliminary so you could do a little bit of homework. And I think I'm just going to turn it over to you guys, and maybe you fire off questions or tell us what you found and your thoughts.
Yeah, so I tend to, there's not a cookie cutter response, right, to one specific scenario. I think it's really dependent upon the person's goals and maybe the reasoning behind a potential decision of whether or not, hey, I have this deal, I might want to sell it. So I think my first questions to that investor would be, okay, so what is the reason you're considering selling? Is it a goal to get into just a fresh new 15-year lease, right? Because there's several clients who they just almost recycle deals because they love having that safety net of a newer 13 to 15-year lease. And when that lease starts to tick down to, 11, 10, 9 years, it's like, okay, it's time to recycle and it's time to put this one away and sell it and get a new one. And from that standpoint, we work with clients who are in that boat all the time. Another scenario might be a client who's maybe just not sold on the specific deal they own, right? Maybe they were in an exchange when they bought that deal. So, and they were kind of up against a gun, and this wasn't their first choice, or maybe their second, but maybe it was their third choice. So, like starting off the bat, they just didn't love the deal, but they loved it more than paying Uncle Sam, a ton of taxes. So they kind of got, quote unquote, stuck with this one, and they held it for some time. And now it's time to move on to the next one. So I think finding out what the motivation behind the sale is kind of where I first start. And I guess another scenario would be, for whatever reason, they don't think this is a long-term viable store for them. Maybe they don't think the store is performing as well as it should be. Maybe they think the sales aren't great. So, at the end of the term, there might be some concern that Dollar General might have a tough decision to make on whether or not they want to stay there long-term or not. So that's kind of where we start with these conversations. We really, we don't, when someone comes to us and says, hey, I want to sell, we're not like, oh, great, here's our agreement and we'll put it on the market, right? Because there's been several times when people call us with ideas of selling, and after having conversations, it's like, you know what, maybe it's not the right time, or maybe the reason they were thinking after having some conversations, maybe there's, a better option outside of selling this now, and maybe we'll wait a little bit. In this specific scenario, I'll let Cody kind of drill into if we got to that point, right, where we felt like it was a good time to sell, kind of what might be next and what might be some options by getting out of the kind of the 9-year deal and looking at a new fresh year deal.
Yeah. Okay. So before we jump into that, let's share with our audience. This Dollar General is located in Illinois, and it generates approximately $103,500 in net operating income. It's a triple net deal, so the owner does not have to pay any operating expenses. She pays the taxes once a year, and then Dollar General reimburses her typically within 30 days. So it is a true triple net deal. It's just mailbox money for her. And I can attest that one concern that a lot of Dollar General owners have, which I know Cody's going to address, is what if Dollar General doesn't renew the lease? When this person bought this store, it was a brand new 15-year lease. And I know that's looming in the back of the owner's mind, is what if they don't renew? This is in a recreational type of a city, so near boating and activities, but it's a smaller city. And for an investor who owns a Dollar General, you really don't get any store sales. So it's really hard to know how a store is performing. And that's where guys like you are the experts. So Cody, do you want to share with us your thoughts and how you look at it?
So just from a bird's eye view, Dollar General, Olney, Illinois, we look at 5 mile population as one of our first demographic key points. So in this town, there's about 11 to 12,000 people in the 5 mile, which is pretty good for Dollar Generals. It's on the smaller side, but still a really good demographic. We've seen a lot smaller towns. So I think the city's good. It is a relocation store. So at one point, Dollar General had an existing store in this market. It was either a really good performing location, or it was a smaller square footage store, and corporate decided, hey, to increase sales and do better, we're going to move the store down the road and build a bigger, prettier building, and it's going to increase sales. So that's always a really good indication of them being there for a long time. It's also a 10,640 square foot prototype. So it's a larger square foot store that can hold more product. That's a really good point about this location. One downside, it's in Illinois. As you look at the entire country, I would say Illinois is somewhere in the lower to mid range of desirability from like an investor standpoint, as far as looking at state income tax. And, if you were going to buy a store in Texas versus Florida versus Illinois, where would this rank? I think, yeah, from a state level, maybe that's not a super high selling point. But yeah, I like the location. I think it's a good Dollar General demographic. From what I've seen, without having boots on the ground, I think this checks a lot of boxes as far as what we look for as far as a good store. They're paying $103,000 a year in rent, which is not crazy. A lot of the new stores that we see being built are in the $150,000, $160,000, even $180,000 a year in rent. So from a company standpoint, I just kind of look through that lens and say, it takes less products to be sold to be profitable at this location. So I think from that standpoint, it's a lower rent store. There's 9 years of term. So I think in our previous podcast, we kind of talked about the different thresholds of where value kind of tips in those 5-year increments. So when there's 15 years left on the lease, when there's 5 years left on the lease, when there's 10 years left on the lease, those are the thresholds of when things typically change. With this being, 9 years left on the lease, you're in a really good spot. It would be better if there were 11 or 12 years left on the lease if you're looking at selling it. Just from a buyer perspective, I think that, there's a little dip in value. It's hard to quantify the exact amount, but there is a little bit of a dip. I think back to what Matt was saying, if her goals are, I'm retiring, I want to look at a Dollar General that has the new lease structure with 5% bumps because I want to, have my NOI increasing every 5 years. I think if her goal is to sell and it's, get into something new, now's a really good time. If she continues to wait and she hits that 5-year mark, there's a really low likelihood she's ever going to add more lease term onto her lease more than 5 years. So I think if it is in her cards to do something different, now's a really good time. That being said, you also kind of, to Matt's point, you kind of have to look at the market as a whole as well. So as a lot of people listening to this podcast know, the market's been a roller coaster since 2022. She probably bought, do you know, what year did she buy this? 2022, 2021?
Yeah, right in there.
So
I
she
think
probably
I
bought
closed
this.
21.
Yeah, whenever the market was really hot. So that's another thing you'd need to look at is, okay, you might have bought this at a 6 cap. And if you were to sell it, I'm just going to throw numbers out, don't quote me. But if you were to sell it 2 years ago or a year and a half ago, this might have been a 8 cap because the market was really soft. And if you had to sell then, that's probably what you would have got. Whereas today, the market's starting to compress a little bit and it's getting a little better. So from a disposition standpoint, you might get lucky and be able to sell this in the 7.25 range. If she bought this at I forgot what number I just said. If she bought it at a 6 cap in 2022, and now it's worth a 7.25, and she paid all cash, does it make sense to lose that value in equity and trade into something else for more lease term? Or just from a conservative standpoint, with this store checking all of these boxes, it's a relocation store, it's a large footprint, it seems like it's in a good area. If you were my family member, would I be telling you need to hang on to this because they're not going to probably leave? And do you really want to lose money when you sell this, even though you're buying something at a higher cap? It's kind of a wash. Like, what are your goals? What are you comfortable with? What makes sense? Back to Matt's point. But that's like kind of a brain dump. But those are my thoughts just from like a bird's eye view.
She did buy it at like a 5.5 cap, and
Yeah.
they were coming out of a multifamily property in Oregon. So they did a 1031 exchange, and Matt nailed it. They were getting out of Oregon because Oregon is not very landlord friendly, and there were limited good Dollar Generals, and this happened to be one that checked all the boxes. And, when you're doing a 1031 exchange, you get to identify 3 properties, but you really drill down to one. And this
Right.
was kind of the best in the market. And back then, when you're looking at a 5.5 cap, there's lots of competition. You're competing with lots of buyers. And now, like you're saying, Cody, the market is compressing, meaning we are seeing a lot of market activity. 18 months ago, 2 years ago, when cap rates were at 8, Dollar Generals were a wash. I mean, I could call you and you had a spreadsheet of 200 of them, and now your spreadsheet's much more condensed and there's more competition and things like that. So, and Matt, I wanted to mention you are spot on when you talk about investors that recycle and are always looking for that leading edge of, I want the newest, freshest lease. What I'm seeing, buyers that want to do that right now, they're also having to pony up some cash because prices have changed, especially if you want to buy in one of those desirable states like Texas or Florida. So, do you guys want to talk a little bit about what you're seeing in maybe some big desirable states like Texas and Florida, just like average Dollar General prices?
No. So, yeah, really quick before we move on, I've got other clients who are in the same boat who bought in 2020, 2021, and that's always it's a tough call to get because it's like you don't even have to ask, where the store is. If you know that someone bought in 2020, 2022, that kind of range, their building is going to be worth less today than it was when they bought it. But the good news is that's across the board, right? So maybe a Texas store or a Florida store or even some of these growing markets, in the Southeast, maybe that dip isn't as big as some markets, but everyone's been hurt, and that's not just Dollar General, right? That's anyone who bought a Starbucks for a 4.25 cap or a 4 cap, like Chick-fil-A, everything has been hit. So in terms of the more quote unquote desirable states, I would say there are more folks who are looking in those states from Cody's standpoint. From income tax is one thing, right? But it's really just kind of growing markets. People want to buy in areas that people are moving to and the economies are growing, and there's residual value in the real estate, there's residual value in the dirt, and there's appreciation opportunities for the real estate outside of just the lease structure or how much term is left on the lease. So I would say, from the Floridas, the Texas, the Tennessees, the Carolinas, Georgias, Colorado, Arizona that are growing. So there's been activity constant throughout, whether it's sellers can meet the price or not, there's always deals trading in those states. So I'm guessing you're getting at, like, is there a cap rate differentiation between these states? And the answer is yes. Obviously, there's, for a new Texas store, I would say anywhere from 5.75 to 6.3 for a brand new store, maybe a little bit higher for a very tertiary market. Florida has always been maybe just a hair more aggressive than Texas. They're pretty equal in just generalized cap rates. And then some of your Southeastern stores, I would say it's really dependent on the supply. So if there are, 4 available stores in Texas, then obviously that cap rate gets compressed. If there are 10, 15 stores available in Texas, then that cap rate, comes up a little bit. And something else that we really haven't hit on kind of holistically with Dollar General is this year, 2026, and last year, their new development product has significantly gone down. And that's been kind of the guidance of Dollar General, whereas historically, call it from 2015 to 2023, they were building almost 1,000 new stores a year. And the past couple of years, that has ticked down to where I think this year, 2026, their plan is to build 450 new stores. So right off the bat, there's at least 500 new development stores that are not going to be available to buyers this year because they don't exist. So the available inventory is shrinking for these brand new stores. So what that's also done is it's helped these 9 to 11 year deals that maybe they're not brand new, but they're close enough in term to where buyers are deeming those as, hey, there's several of those. I can't buy a brand new store because there's not as many of them, or those are $2.5, $3 million deals in some cases. So it's kind of opened up this window of time where Dollar General isn't building as many, the inventory's not there. So folks that want to recycle, they may be able to get a better cap rate on the disposition, but then you have to realize, okay, what position am I putting myself in when I sell and when I buy? So everyone is in the same boat in terms of, okay, I might be able to sell for a little bit better, but then what am I going to buy? And that's where having someone that has access like Cody to availability to stores, maybe even stores that aren't listed on market, or, scouring, the Crexes, LoopNets, the CoStars to find maybe diamonds in the rough, that maybe stores that aren't marketed, very well. It's a little harder to find the stores, and maybe there's some value in an underpriced deal. It really helps to work with guys or girls that know what a good deal is and know where to find them, or have inventory from, different developers or owners that you might not see on the market is really important and can kind of guide you of where the market is at time.
Mm-hmm. When you guys are looking at a store like this one in Illinois, how do you measure like store sales or store results? How do you know the strength of the store?
Yeah. So I'll talk, Cody and I both have lots of thoughts on this. So I would say over the past couple of years, you've seen a lot of data on offering memorandums regarding kind of store rankings, right? And percentiles of where stores rank and performance-based data. So that is all aggregated from mostly cell phone data, right? So people have cell phones. Obviously, most Americans have cell phones, and there's different data that gets sold based on certain apps that track kind of people's movements. So different companies have created kind of algorithms and data sets to be able to trace people with cell phones in and out of stores, and they compare all the different Dollar Generals with each other and creating kind of an aggregate set of data that will rank a store on performance based on the traffic in and out of a store, which can be really great and can be really helpful. But, every Dollar General is different. And most Dollar Generals are in very rural markets. So there might be a lot of data gaps where you're having to create kind of, algorithms to fill in the gaps. So you're making a lot of assumptions, maybe based on a limited data set for certain types of stores. So, but that is one way that people are currently trying to find out how well a store is performing. But candidly, the best way to find out how well a store is doing is visiting the store in person and trying to chat with a manager. Obviously, Dollar General is not required to report sales. And candidly, they give a lot of guidance to their employees to, hey, it's really pertinent data for us. We don't really want to share that because that gives us a lot of leverage when it comes to extend a lease or renew a lease, which makes sense from a company standpoint. But visiting a store and kind of chatting with the store manager and getting to know the store manager has been very helpful to clients. And then you may not get, exact sales figures, but you'll more than likely get an idea of, hey, this store performs well, or, in our region, this store historically ranks in the top 3 of the 15 stores that are in this region, which again, you may not get exact numbers, but you know that this store is performing well compared to other stores in the area. Or on the flip side, you might get information that leads you to believe that it's not a high performing store. And at that point, it's like, okay, what do I do now? Do I make a decision to sell this store based on a couple conversations I've had? Do I kind of continue to check in on the store with, maybe I get to know the manager well and I find out if there's, a certain problem with the store that's creating this issue, or if it's just a store that, might not be getting the traffic it needs based on its location, or people tend to go to a different location, or people tend to go somewhere else in town. All of those are conversations that are easier to have when you're in person with a store manager, but it's not easy, right? Some people kind of struggle with, man, I don't want to go into a store and ask these really pointed questions. And that's where we can kind of help guide that process, or even visit the store with the client. Or Cody and I have been on several site visits ourselves to try to find out if there's anything we can tell on a site visit. So those are really the ways, some of these really old stores used to perform share store sales, but really since, call it 2007, 2008, the leases do not have that clause in the lease where they're required to report sales.
Yeah, and
That's helpful.
correct me if you disagree. I think like an average store does 1.5 to 1.7 million. What would you say?
Yeah, I think that's, they're publicly traded companies, so you can find out what total revenue is and, essentially divide it by the sheer number of stores, which that would get you an average. But there's, with 21 plus thousand locations across the US, it's, an average, you might have a store doing 4 million and then a store doing 100,000. So the average would be, 2.2 or 2.3 million. I think based on conversations, 1.6 to 1.8 is the new average, if you will. But it's a lot of stores. So I think, if from our perspective, if a store is doing north of 1.5 million, I think that's an okay performer. But that also doesn't factor in how much are they paying in rent, how much are they paying in property taxes, do they have a shrinkage issue at the store, meaning is there theft, right? Because anytime there's a high level of theft at a store, not only is that a lack of sales, but they're removing product from the shelves without anyone. So it's just a sheer loss. So shrinkage or theft is become a really big issue for Dollar General at the corporate level. And they've actually taken some really good steps to kind of combat that they've removed, I think across the board, they've removed almost all of their self-checkout kiosks, which was leading to a lot of theft at stores. So, I'm based on the last transcript I listened to, I think they've really buttoned down their theft issue, which has really helped their margins over the past year, which is, their stock's kind of been a whirlwind over the past few weeks, which most stocks, because of what's going on overseas. But without that, their stock has really been on a good trend. And a lot of that, I think, has been attributed to getting the shrinkage under control at their store level.
Interesting.
I think to go off of all of that, so we use a tracking service called Alpha Maps, and I ran that on Olney, and it actually showed in the 20th percentile, which is not good. But I think, to Matt's point, anytime you use the software, whatever brand it is, you really have to have a level of discernment when you're looking at it. I think the next step, if you really wanted to make a life-changing decision, would be going and doing a site visit like you mentioned, just to know, is this accurate? Are y'all really not performing compared to all the other stores in the country? So yeah, just a little nugget about Olney.
Yeah, it would be surprising if a relocation store was not performing at least average. It can happen, but to Cody's earlier point, a relocation store is typically built because there was a history of performance at another location. And when they relocate, it's not like they're moving across town. I've had stores relocated right next door or right across the street. They're usually very close to the previous location. So it would be really surprising if a relocation store is not performing well. And that's why they're very kind of desirable stores, and it's a marketing point. Everyone knows a relocation store because there's a history of performance at that location. So I would guess that the data on that one is probably something's off on it, right? And it's not a perfect system for these tracking services. So to Cody's point, if you can go and chat with a manager or even an assistant manager, or even just sit in the parking lot for a few hours, and not that you can tell how well a store does by sitting in the parking lot, but you'll get some kind of information by just being there and seeing the traffic patterns of a store, which is a really good idea to do when you're buying or selling a store.
Yeah, I tell my clients typically either during peak commute times in the morning or afternoon when moms or parents are taking kids to soccer games and things like that, picking up necessities before they go home. And then Saturday mornings are a good time because a lot of people are out running errands and trying to get ready for the weekend. So
And just to
Um,
add some more
yeah,
context, you had said,
please.
one of the major concerns all these buyers have is what if Dollar General leaves and I'm stuck with this building?
Yes.
That's a question we get every day. And the stats that I always go back to is this is all in Dollar General's public reports. The past 3 or 4 years, they've closed down or relocated about 150 stores per year. And now there's 21,000 locations. The likelihood of them not exercising an option to stay where they're at is less than 1%. So understand the heartburn and understand being scared and having all of someone's money tied up in one investment. That can keep you up at night. But just to ease some of that heartburn, it's a really small percentage, even in these small towns. And of that 150, what I've been told verbally is about 30 to 40 of those stores of the 150 were relocations. So for this to be a quarter of that 0.5% of the whole company to be a relocation store, like it's a rare situation to own a store like that. So yeah, I would be shocked if it's not performing, to Matt's point. So
Well, guys, as we wrap it up, I know a lot of our listeners and audience will have questions. So, what if you had one piece of advice for a Dollar General owner or an investor? What would be one piece of advice that you'd give to somebody that owns a Dollar General right now and is pondering if they should retrade, or like Matt calls it, recycle, or stay in the saddle? What's your thoughts?
And not to like pitch ourselves, right? But I think what I would want is I would want trustworthy advice, right? And I think, we've had several conversations with existing clients or just new folks who call us. And oftentimes the thought is, hey, this isn't a good time to sell, in our opinion. And here's why. So I think, hey, working with somebody who knows any space, right? You want to work with an expert, or at least someone who is very familiar with kind of the ins and out of the tenant. So the first thing I would say is, look, Dollar General is doing well as a company. They're investing in their active stores, right? Something we didn't hit on is this year they're remodeling or renovating almost 20% of their entire portfolio. It's like almost 4,500 stores, existing stores that they are putting money into via the project. It's Renovate and Project Elevate remodels. I'm sure a lot of the listeners have probably received these letters from Dollar General saying they're remodeling. So you have a company that is working to improve existing stores and is working to improve the stores that they plan on growing in. And so you've got a tenant that is responsive to you. You've got a tenant that is trying to improve sales at their location. So you've got a good tenant. You've got an investment grade tenant. You've got a good asset. People want to buy these. People are looking for these. It's a higher yield investment grade credit tenant. So you've done well. It's a good asset to own. And so my advice would be, if you are considering any of this, just ask questions and find out from whoever you decide to have these conversations with, do I feel like this person has my best interest in mind? And are they going to act as a fiduciary for me? Are they going to try to help me? Or is it more of, hey, I'm maybe just looking to have a transaction here. So, and that can be hard to find, right? Just like anything. If I'm going to buy, sell a house, I'm in the same boat. I want to find someone that's working with me, that knows the neighborhood, that knows this market really well. So my first step would be to find someone who can give advice that is knowledgeable in the market or knowledgeable in the sector, would be my thoughts.
And Cody, what's yours?
ditto. No, he took the words out of my mouth. I mirror exactly what Matt was saying. I think I've seen a lot of situations where people were represented purely for commission. And I think finding someone that can give you good advice, that is not motivated by paycheck necessarily, and knows the space and can give you just a clear answer on what would be best for your goals and what you're wanting out of this investment is key. Yeah, Matt said it more eloquently, but I agree with what he said. So
Matt, thanks for touching on the stores that are remodeling also. What do they do they have a model that they follow when they remodel? Oh, I've heard that it just varies all over the board on how much they do in a store.
Yeah. So they really currently have kind of two major types of remodels. So the project renovate is more of a traditional remodel where they're going to come in and upgrade systems. They might add produce. That's been a big thing, right? For these rural market stores. If some of them can get, some apples, bananas, lettuce, some ground beef, that's a big thing for these rural market stores where they don't have grocery stores. So that's one where they're putting in, a bit more kind of an investment to the store. And that's a project, I believe, Project Renovate. And then the other kind of main was the Project Elevate, which I just had a client who is purchasing a store in Texas. And I did a site visit for them. And there's a big banner on the window saying, remodel under progress, remodel underway. So it's great. So like, what are y'all doing? And so on that one, it's more of a rearranging of the layout of the store. So on that one, they're taking the coolers where if you're walking in the store, all the coolers are on the left-hand side. They're moving them to the other side because they can add some more coolers, and that's where most of your frozen foods or your drinks or your beverages are. They're going to add some space to there, and they're going to replace on the other wall with more kind of pharmacy related products. So for that specific store, that store kind of needed more of that type of product because it was a smaller store in a community and there wasn't, there's not a CVS, there's not a Walgreens. So for that specific store, that's kind of the route they were going to go. So it's really Elevate. They look at the kind of the layout of the store and what might be needed to add to it. And then on the Renovate, it's more of upgrading the systems. They might put in new floor, might be an older store that's got really rough floors or rough ceilings. So they're going to kind of replace it, make it look nicer, clean it up, and kind of add some additional things that maybe that store doesn't have at all on the two different types of remodel projects. That's a good sign though, when, if the landlord gets that means they're investing in the store, right? Like it's a store they're going to put money into, and these remodels have shown to, I think, increase sales anywhere from like 5 to 10% over time at a site, which is a really good return for them.
Yeah, that's huge. That's really big.
Mm-hmm.
Well, gentlemen, thank you for being here. Share with our listeners how people can get in touch with you. And we're also going to drop your contact information in the show notes, but tell people how they can get in touch with you.
Yeah. So, email or phone is the best. We've got our phones on all the time. We don't have office lines. We give out our cell phone numbers and we're on our cell phones a lot. So cell phone or email is by far the best way to reach us individually. Our website for our company as well. You can just see all of our listings and all the deals we have under contract and that are available. Yeah, Cody, any other ways? Cody's more on the socials than I am.
Yeah, no, LinkedIn is always easy, but yeah, our website has all of our contact information. I think it's trinityreis.com. So yeah, would love to help however we can. And then even to add to that advice piece, like we do free property evaluations. So any net lease product you have, and if you want to know our opinion or what we think it's worth today, we can tell you that in 30 minutes. So would love to help however we can.
Well, gentlemen, thank you for a great podcast and spending your knowledge and your time with us. We're really appreciative. Have a great day. Thank you.
Yeah, no, thank you.
Thanks, Renee. We appreciate you having us.